So just to start, off here, and as I get to the end of this this page here, I'm going to ask Scott, kind of what he sees typically. But pros and cons of selling an ESOP company, just to get that kind of out of the way first. I mean, I think some of the obvious upsides are that there's the potential for a high valuation. I think everybody that's an ESOP company understands that the ESOP is valued on a fair market value basis, doesn't necessarily take into consideration strategic value that might exist. So when you run a process or when you sell to a third party, there's always that possibility of unlocking that, quote unquote, strategic value for the company. What that means at the end of the day is that you're getting liquidity for your investment, or the ESOP is getting liquidity, and you're funding those retirement accounts with cash. Another kind of benefit to that is that you get investment diversification. And so instead of having a single employer security, you have the ability then to roll that and diversify your retirement assets. It does reduce some holding risk associated with that. And then, there's some strategic moves that you could certainly make as part of that as well. On the downside, as we always say, I think it's good to go into any process with your eyes wide open. So while there's some very interesting upside, there's also some potential downside that you have to be concerned about as well. So I think the biggest one that we typically see is the loss of the ESOP culture. And so typically, companies that have been an ESOP for a long time tend to have a pretty unique culture. They've been successful as an organization. And in a lot of ways, it's kind of the part of the fabric of what makes the company the company. And so, I think, not only do you have the potential to lose that, but I think from our experience, at least, many buyers are also concerned that that uniqueness of the ESOP somehow goes away and the business is somewhat jeopardized by the fact that there's no longer an ESOP in play. There are some, fairly creative ways that you could still continue the ESOP, or at least some semblance of commitment by the broader employee base, which we'll talk about a little bit later in the presentation. And so there are some creative ways to kind of get around that challenge or concern, but I'd say that that's probably, one of the largest. Some other items to consider, corporate governance, that will change. And so, you used to having an ESOP trustee, you're used to having a valuation firm, and then you have a board of directors, which, may include a combination of inside and outside directors. That all will be different going forward. And so you'll have a new owner with a new board and a new corporate governance structure. Job consolidation risks, something to certainly be aware of, especially for strategic deals. Part of what strategic consideration can mean is that some back office or operational redundancies could be eliminated. So that means job loss or potential job loss. And so that is something I think to be aware of. Long-term equity upside. This is something that the trustee will look at in evaluating any kind of sell versus hold analysis, which is if there's a lot of great growth prospects in the business, are you getting adequately compensated for it at the front end of a deal, or are we better off hanging on to the stock and letting the equity appreciate from the growth opportunities that the company has. M&A closing risk. And so anytime you run a process, it doesn't come without risk. It's a fairly involved process that takes time. It can be a distraction, and at the end of the day, there's no guarantee that you will necessarily close a deal. So that's something to be concerned about, or at least aware of. And then confidentiality concerns. So anytime you go through any process, I think some of our clients, one of their biggest concerns is making sure that you go through that process in a confidential nature, and that either their employees don't find out about the transaction too soon, or even worse, competitors or folks in the industry. And so again, I think as we advise clients, anytime you're ready to go through a process, you want to do it, you want to be prepared, and you want to go through it as quickly as you can so you could avoid some of the confidentiality risks that might accompany or that do accompany any deal.